Hey, it's Mark from Union Home Mortgage, and with the changes in the cooperative compensation that we've always been under, the seller reimburses or pays the buyer's agent as part of the agreement, the listing agreement. So that's all changed. So I want to go through some different options about how we can set up the buyer to have a successful transaction and have everybody paid accordingly. So in column 1, I have just a typical purchase $400,000 at 20% down. This is the way it's always been. The seller is going to pay the buyer's agent's compensation either directly through the listing agreement, or they're going to do a seller concession for 3%, pay the buyer, and then the buyer pays the commission. So it's going to be a pass-through. It doesn't change the way it looks. 20% down. Buyer's payment is $25.54, and cash to close is $92,662. So column number 2. So no seller paid compensation. The seller doesn't want to pay anything. So same purchase price, 20% down. We've added the $12,000 3% commission to the bottom line. So now the client's cash to close goes from $92,600 to $104,600. The payment does stay the same. So that's option 2. That's a pretty obvious one. A lot of buyers may not have the 3% or might not want to shell out the 3%. So column number 3. So instead of leaving the purchase price at $400,000, everybody agrees to go in at $412,000. We raise the loan amount based on 20% down to the larger number. And then the seller does a seller concession, so the seller is still whole. They're still getting what they want out of the sale, and it's a pass-through. The seller does a seller concession, and the buyer pays it at closing to the buyer's agent. So now his payment does go up a little bit to $26.15, and the cash to close goes to about $95,200. So the fourth option is, let's just leave the purchase price alone, and the seller doesn't want to pay the buyer's agent side of it, and so we'll raise the loan amount. So instead of going 20% down, we're going to go 17% down. So yes, there is a little bit of mortgage insurance that will kick in, but this keeps the buyer's cash to close low, and it will increase the payment a little bit. So the payment goes up because the mortgage amount went up and because there is some mortgage insurance. So again, it just depends on what fits and based on the client and the situation. So this will work with any conventional loan as long as they are putting at least 3% down more than the minimum required. So a first-time home buyer is 3% down. Not a first-time home buyer is 5% down. Now for government loans, they have to have, instead of the minimum down, they have to be willing to put down an additional 3% to begin with. If we have to increase the mortgage amount to make it work, then we're back to the minimum down. So for rural development and VA, instead of putting 3 or more down, you can go back to 0% down. And for FHA, they have to have at least 3.5% down into the deal. So they would have had to be willing to put more than that down to begin with. Now MSHDA, this also works for MSHDA. MSHDA now does allow the buyer to pay the buyer's agent commission. It cannot come out of the down payment funds. They have to have it in their account, or it can come from a gift if the seller's not willing to pay for it, but there are ways to do this. So let me know what you need. Feel free to give me a shout, 248-705-8431. Again, Mark from Union Home Mortgage. Thanks a lot. Have a great day.